right, testing, testing. All right, guys, good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Just putting some things to charge. Good afternoon, good morning. It is May 4th. Happy Star Wars Day, Wednesday, 2022. Let's go ahead and begin. Today is the big day, the Fed day, FOMC today, Wednesday. The expectation is, I believe, 50 basis points on the rate hike. So again, I won't waste too much of your time today because it's all about business. So I just read a couple of things today. Biden will be speaking today at 2 p.m. Today regarding budget deficits and what have you. So prepare for like a 1-2 punch combination today. 2 p.m. the president, 2:30 we have Powell. Who knows if they overlap? I will be watching it all. I went ahead and broke down really quickly the market blog. I apologize for being late. It's 9:04. Here is the actual market blog, and I wrote this down. Let's go over it together. So let's go over it. Remember, this is all for our members. We're going to make it available to all as we're working on it. But for right now, it's just for members. This is part of our server. So I just typed this up this morning. Remember, there's no such thing as good or bad news, guys. It's just news and how the market reacts. So here are the scenarios for today's FOMC, the Federal Reserve Open Market Committee. So 0 to 25 basis point hike or a cut, that's highly unlikely. But let's go over the scenarios if that does happen. I even said I won't spend too much time on this scenario since it would pretty much a decision from the most disconnected central bank on earth. If this happened, the market would pop an initial sugar rush of low rates and a Fed still technically accommodative. But then we would flush immediately on the prospect of higher inflation. So I'm just giving you all the scenarios. That's not the exact scenario that's going to happen. It's pretty much unlikely. You can put it down as like less than 0.1% of a shot. Again, you never know, right? 50 basis point raise, this is pretty much a lock of what's going to happen. Again, trading and the markets is all about probabilities. So extremely important to look at different probabilities and set yourself up. So we expect a 50 basis point raise today. Pretty much a lock here, like a 90% chance. So basically we would accept it as the market and feel good that the Fed can somewhat be predicted in terms of policy. Markets would jump initially on just getting it done. It's kind of like, eating your vegetables, going to the doctor. You just got to get it done, right? Just knock it out. At least it's over with. I don't have to worry. Kind of like we have more anxiety about an event than the actual event itself. Whether it's public speaking, a big exam at school, it's kind of the same thing. Then Powell's speech will dictate price action stocks. Here's some of the keywords I want you guys to look at today. Here's some of the words. Asset prices, aka stocks. Peak inflation. I want to hear if they talk about peak inflation. Winding down of assets. Remember, they got to run off that balance sheet. I want to see how fast they're selling off bonds. As you can tell, the 10-year yields are creeping higher. Again, they're pushing all the bonds that they have on their balance sheet to the open market, again, which creates bond prices to go lower and yields to go higher. If they were buying bonds, that would create an automatic buyer. Rates would come down. That's how monetary policy is done. Next here we have the big one dot plot and future hikes. We want to see if they are committed to doing 200 basis points by the end of the year, 300 basis points by the end of the year. Again, some kind of hint on what we're doing, or they're just going to stick with it's still a live event every single week. 75 to 100 basis points. Pretty much an unlikely scenario. I gave it a 10% chance it happens. This is pretty much the rip the bandage off scenario where they just said, hey, you know what? We're going to go full Alan Greenspan. We're just going to rip off the bandage and we don't care what happens to stocks. We're going to slow down inflation, period. And that would probably be the most economically prudent. You're not worried about any kind of soft landing. If you're watching the economy, you would spike down to possibly 3,900 on the S&P. 3,800 is a big possibility. As the Fed, let me read the scenario. Okay, pretty much rip the bandage and would head us quickly to 4,000, which is my target anyways. And below, as the Fed just confirms that it's willing to grind the economy down to kill demand and lower prices, which is pretty much what their, what their mandate is. This is what I would call the dark night scenario. This is funny. Doing what is necessary because the Fed isn't the hero we need, but maybe the hero we just deserve. Again, I love that movie. So again, it's kind of a part like doing the things that no one wants to do in order to make things happen. That's one way to see it. Do I think that's going to happen? I will give it a 10% chance if that happens. Not the worst thing in the world, but yeah, it would probably just kind of just get it out of the way, get inflation killed, unless they expect supply chains to come back in order, which we don't know. That's really the only thing that stands out to me. Those are the three scenarios based on rate hikes that's going to come this week, or maybe not a rate hike. But here's my early bear bull indicator. This is just a survey of mine on how I'm looking. I'm leaning 70% bearish, 30% bullish. I expect at least a spike as we get closer to the event. Really the big key, guys, is 4,200 on the S&P. We're right below the 100. Haven't really done anything. Granted, we are up today. Are you making any big moves in terms if you're an investor today? Not really. I don't think you're really out there to buy anything or to sell anything. The only thing I would say is maybe you want to take away some of those high betas, the aggressive growth names. If you just want to like kind of cash out because you're just worried about volatility, this is as good a time as any since we've had 3 green days in a row. But again, we're still at 4180, guys. We're nowhere near the previous support that we had last week, which was 42.52, if you guys remember. So again, there really isn't tons to be bullish about. There is some decent news, but again, the price action is dictating in terms of the market that we're still worried about the Fed. We're still worried about a lot of things, which is China, coronavirus, their lockdowns. We also have Russia and Ukraine, and we have the Fed. Those are your 3 things. And inflation, that's a big deal. We did have numbers come out today. We had U.S. ADP employment change. This is private payroll, 247,000 jobs added. Estimated was 383,000 jobs added. AMD did also report yesterday. I posted that on Instagram for you guys on Twitter. I do own shares. I'm still happy. I did buy the dip on them. So again, AMD is one of my babies. I love them. Marriott, I was talking to Investment Club about it, had a great quarter. Marriott and Hilton both had great quarters. Airbnb had an amazing quarter. So again, travel, guys. Remember I talked about travel and airlines? Don't forget, been saying that. We're starting to get that demand. Marriott just also made a quick comment, expect further meaningful RevPAR improvement, revenue, improvement through the remainder of the year, which will be roughly flat to 2019 levels. So basically at 2019 demand. Keep in mind how rough no one was leaving the house in 2020. So again, it's good we're getting back to the levels that we want to see kind of get back to normal, and the hotels and the airlines. Remember Delta talking about big demand. That's important. Make sure to keep an eye on that. Good morning, everybody. Good morning. If the Fed raises half a percent, which is 50 basis points, guys, or less, we rally. It's safe to say it's a good time to accumulate some of these big names long term. That's the case. No, I don't think that you run out today and do anything, regardless to what the Fed says today. I wouldn't want to buy on the way up. I definitely don't want to sell on the way down. Again, what I'm trying to do is figure out, is the Fed here going to say, this is the lowest you're getting? We're going to be accommodative. We're not going to raise as fast. Again, their mandate is not asset prices. Their mandate is to lower inflation, period. And now, having elevated S&P prices, 17 times, 18 times multiple currently, we're at 16 times earnings on an equal weight basis. Again, pretty much on average. Maybe the Fed just says, we don't give a damn about stocks, so which they really don't. But we'll see if they fall. Again, it's 2 different administrations, guys. Remember, President Trump was his barometer was the stock market. President Biden, not so much. So again, they don't really care if the stock market goes up or down short term. At the end of the day, you have to kind of see it as what it is. The Fed is first mandate or first mission is to lower asset prices, including the stock market. The question is, do they feel like they've lowered enough? Do we see peak inflation, or we still have more to go? I still say we have 40-50 on SPX. That's your gap fill. Again, we may get a little pop today. If you do get a pop today, that'll give you an opportunity to possibly raise some cash on positions that you don't want to own. But again, would I be making major financial decisions if the stock market goes up? Absolutely not. Only if it goes down. If we start breaking 4,000, that's where I want to get in and start looking at some stocks I want to buy. And again, you have the report cards of all these big earnings companies and see exactly where they're moving forward. Make sure to check out their guidance. Make sure to check out their balance sheets. Remember, cash right now in a high inflation environment is going to be key because everyone wants to make sure that they have enough to weather the storm. What are your good thoughts on Uber? Do you think is a good opportunity long term? I do like Uber very long term, but the price action is shitty. It just is what it is. I remember I got in like at 50. So I'm down about 50% on the stock. Now, again, it's a very small position, mind you, not really much. But again, they're just cash burning, and it's tough. Lyft just showed you they had horrible numbers. They're not getting people to drive. Again, it's a tough labor market out there. Not everyone wants to Uber with high gas prices. So I expect a little more weakness from the rideshare companies. Do I say that it's going to last forever? No, I don't think it'll last forever. You could start looking at possibly below 20 if you really want to get a nice discount, but I would not run and buy Uber here. No, I would not. Think we rebound and hit S&P all-time highs by the end of the year? I do. I think we do bounce back. I really do. I want to get a rip off the bandage of 4,000, and then we can start working our way higher with better news. I need something. I need China to work things out with coronavirus. I need at least a peace deal with Russia and Ukraine. I need at least the Fed saying, okay, we're done raising rates now. We're good. One of those three has to hit so we can get some kind of ignition to the upside. But usually, if you want to see some news here, I'll read you a couple of things. How about this? NASDAQ Composite. After biggest drawdown, the most recent drawdown, let's say the most recent one was 2001 September. We had a drawdown of 17% on the NASDAQ. The forward returns, 1 month 13%, 3 months 30%, 6 months 23%, 1 year down 22%. 1998, same thing. You can see here. This is from Zero Hedge. This is the NASDAQ. Rain after rain coming sunshine. Look at the internet. Basically, the internet index pretty much backs to pre-pandemic lows. So pretty much a round trip after coronavirus. So again, these are opportunities out there to see what can we do. Now, today I have my trading hat on today. I would not be doing much investing, but trading, yes, that's what I'm looking for. Quick opportunities out there, especially with the Fed. Maybe you start seeing some breaks and supports or resistance. We just have to wait and see as we go along. Gold is pretty much flat today. Crude is up 3.85%. So commodities are bouncing somewhat. Russell's up 0.33%. I still have a short position on IWM, but that's for May 20th. I think we still go lower. 10-year yields, 2.983, up 23 basis points. The dollar index is fading here. Interesting. So again, kind of a dovish kind of pivot here as we're starting to look here. Again, with the dollar continues to fall, it provides a very positive backdrop for the NASDAQ. So the question is, do we revisit these lows? Do we break the dollar lows and see if NASDAQ can coincide and break above 13,577? But again, 2 p.m. looms. We have Biden at 2 p.m. We have FOMC at 2 p.m. We have Powell at 2:30. So get a cup of coffee ready. It's going to be a long one. VIX is pretty much just holding flat. You can see at this support kind of holding above 2806 short term. We broke that previous resistance of around 3168, so now you're in between two zones. You have the 100-day, you have the 200-day on the hourly above. I can't say you can't do tons of technical analysis in terms of the VIX, since it's just an index, but it's important to follow as you go along. So today on my board, I have NASDAQ, S&P, dollar, and the VIX all going on today, because the dollar will tell us a lot of the hints that may happen. Again, it's all about the dollar versus other currencies. It's extremely important to watch as we go along. Bitcoin is up $39,000 per, 2864 for Ethereum, both up over 3.5% or 3.4% for Ethereum, 3.8 for Bitcoin. Let's see, are you still in any trades? Yes, I'm still in my trades. I still have some puts, and I have one call open, which I thought we would get that continuance yesterday with the break of the 100. If the members on the server do remember, I talked about that on the market blog. So 4,200 is a key level. I still have my puts holding. The worst thing about this week was that I did have longs on SPY, which I hit 32%, but I didn't close them. So unfortunately, that's what happened. I had to close out because we broke support. But it's just been a ping pong market. We broke key support, 4101, that Russian invasion low. We settled below that. It's not like it was just a wick. If not, I would have closed it. But we didn't break below. We just bounced back, and we've been kind of sticking in that range of 4186 to 4142. 40 handles. You're really just getting chopped up here unless you're looking for opportunities in individual names. But the indices right now, it's a pause until the Fed. Thoughts on oil company SM, time to sell? Let's see. SM Energy, don't know much about them, but there is a gap to fill down to 37.72. They just reported their earnings, so more likely you may fill this gap if oil does come back down. So I keep an eye on crude if you're looking to short this or to buy some. For energy companies, they're very cash rich now with higher rates, obviously higher commodity prices. You do have the overhead resistance of 38. Energy is still not a bad place to be, especially in a higher inflationary environment. Granted, oil is still kind of just ranging. Again, a break of 110, I would say energy isn't a bad place to go, because you've seen what ExxonMobil's earnings said, that they're giving cash back to shareholders and not spending tons on CapEx. They're really working as being that value stock. Remember, the last 2 years, they were doing horrible. So this is ExxonMobil, Chevron's, Shell's, Valero's, their opportunity to really entice investors, say, hey, come back to energy. I know we're not tech, but we're not boring either. We'll give you dividends. We'll do buybacks, whatever you want. They have to attract that money. They have to. So again, watch out for these oil companies to start really pushing more capital returns and more stock buybacks in order to entice investors who are looking at energy markets for a place to park some cash. You don't need to be 100% tech. I get it. It doesn't have to be all Tesla. But I'm saying, again, putting a slice of energy in your portfolio. I did trade energy in my portfolio, and I did catch it, but I have not added a new energy position as of yet. Break 110, we can start seeing what's up. Amazon has a huge gap to fill in the daily. Well, that's what happens when you basically have a horrible quarter. Well, not a horrible quarter, but a bad quarter. If we go to the daily, you can see it right there, 2706. Totally, definitely have a big support level for Amazon. And if you look at Amazon on the 2-year daily, we're right there. Wow, we're starting to get back really close to the pandemic lows. All this, interesting enough, was what? Just one big COVID sugar rush? Could be. Well, we got a lot going on, guys. So, server members, I will talk to you guys as always on the G.A.R Live Market Blog. Let's make it a great day. I will catch you guys later this afternoon for the aftermarket recap. I thought I wasn't going to do it yesterday because Real Madrid and City played. I thought they played yesterday. It was Liverpool and Valencia. Liverpool made the final. But today is Real Madrid and City. That's at 3 p.m. I'm definitely going to watch that. So I'll have like my eyes both on on Powell, Biden, and the Champions League final. So let's see. Hopefully I won't get into overtime in that match, so I can do the actual afternoon notes. So I'll go over what Powell's saying. I'll take a look at the price action with you guys as always. Have a great rest of your Wednesday. I will catch you guys later for the aftermarket recap. Go Real Madrid. Let's get this win and play Liverpool in the final and then beat them like we did a couple years ago. Cheers, guys.